Caro, superb area. Let's go for it. Tell me. The company shall prepare the financial statements and they shall give those financial statements to the auditor. Auditor will prepare the audit report as per SA 700. There's another requirement on the auditor's head that the auditor should also make a report as per Caro 2020. Caro has in total 21 clauses. Auditor has to report on as many clauses as applicable to that organization. Caro is applicable to all companies, including foreign companies. Caro, however, is not applicable to 8 BOSIP. Go for it. Tell me you are champions at it. Go for it. Tell me. Section 8 company, banking company, OPC, small company, insurance company, and certain private companies. Why am I making this arrow? Because this arrow will come down here. And for chote private companies, Caro is not applicable. Not applicable. Okay. So for chote private companies, Caro is not applicable. For bade private companies, Caro is applicable. This is how we did it. Which companies are chote private companies? Private companies. There are 5 points in it. So I'll first write the points. Point number 1, point number 2, point number 3, point number. Let's start. Private companies which are not a holding company of a public company. Private companies which are not a subsidiary company of a public company. Private company having a paid capital plus reserves up to 1 crore, borrowing up to 1 crore, revenue up to 10 crores. When all 5 conditions are satisfied, then only you will call the company as a chote private company. Any one condition not satisfied will become bade private company and Caro will become applicable. Remember this, when you take reserves, borrowing, revenue, you have to follow this instruction sheet which I gave. For reserves, take all reserves and always deduct profit and loss account debit balance. If they give you a balance sheet in the exam to assess, you have to keep this in mind. Borrowing, you should consider all borrowing that is long-term, short-term, secured, unsecured, interest accrued and due. And revenue, you should take sales, other income. See, it is revenue and not sales. Revenue means any kind of income the company has earned, you have to include it. You will take sales, other income, sale of fixed asset, revenue from discontinuing activities, subtract the sales return, trade discount, excise VAT. Excise VAT basically means tax. So in today's times, you will deduct GST basically. You will never ever deduct 2 things, commission on sales and cash discount. You will never deduct these 2 things. Are we there here? Yes or no? Comfortable? Okay. Let's go ahead with the big gun, and that is your 21 clauses of Caro. Okay, let's start. Caro clause 1 is in relation to, I'll highlight, it is better if I highlight, 1 minute, wait. Caro clause 1 in relation to property, plant, equipment, intangible asset. In that we have done a code called PPT Rebe. Whether the entity is maintaining proper records or not, whether physical verification has been done by the management, and if there is any material discrepancy, whether it is properly dealt in the books of accounts. We'll check the title deeds. Regarding this, we had seen, go for it, tell me. Company controls company's name. In these cases, we'll get the title deeds. Somebody else controls somebody else's name. In that case, the asset is a leased asset. In that case, we don't have to worry about writing in Caro report. Company controls but somebody else's name. In that means the company is doing some manipulation. So we have to ensure that that table is filled, which is given in Caro clause 1. Okay, in this point. There's a revaluation. In that case, we had done this way, that in our example in the class, the value of the class of assets was 40 crores. 40 crores plus 10% is 44 crores minus 10% is 36 crores. If the value is less, if from 40 crores, if the revaluation is done and the revalued value is less than 10%, in that case, we'll only mention revaluation is done. But if the revalued value is 10% or more, in that case, you have to mention that revaluation was done, and we have to also mention the amount of change. Comfortable? Okay. So mention amount if it is 10% or more. Next is in case of any proceeding under Benami Transaction Prohibition Act 1988, we have to mention that proceeding is going on. This is Caro clause 1. Quick recap. Caro clause 2, we had done inventory. We had done something called as P3WC. Whether physical verification is done by the management, while doing that, whether their procedure is appropriate or not, and if they find any discrepancy of 10% or more, whether it is properly dealt with it or not. We have P3, physical revision done by the management, whether the procedure is appropriate or not, and if it is properly dealt in the books of accounts, if discrepancy is 10% or more. WC, let's go for it. It was a nice one for you so that it is easy for you to say. Go for it, tell me. The bank or finance institution has given any working capital loan to the company of more than 5 crores. They will take current asset as security. They'll also want the company to file their quarterly statements or returns where the bank can keep a check on the value of inventory at the godown. Company sometimes may try to fool the bank by showing higher value of inventory is there. Hence, there is a chance that the company may do manipulation in their quarterly statement or returns. So auditor, when he makes Caro report, he has to mention whether the quarterly statements or returns are in agreement with the books of accounts. If not, then the auditor has to provide the details of such a manipulation. Are you there with me, yes or no? This Caro clause 2. Let's go to Caro clause 3, the big one, the giant, that is your linguse tu kofilo. Let's see this linguse tu kofilo, which is basically this entire area which I'm shading in yellow. This is that area. These are 6 points. We are done in the class. Let's do one by one. Tell me, linguse tu kofilo, loans given, investment made, guarantee given, security given to kofilo, company, firm, LLP, other parties. In that, what all points will be checked? We'll check 6 points. Let's start first. When loans have been given to JASU or other than JASU. JASU means your joint venture associate subsidiaries. Other than JASU means other than joint ventures associate subsidiaries. When loans are given to JASU, in that case, we have to mention 2 things in the Caro report: the aggregate amount and balance outstanding on the balance sheet date. Loans are given to other than JASU, we'll mention again same 2 things: the aggregate amount and the balance outstanding on the balance sheet. Okay. Next, we had done provide loan guarantee security. We had done terms and conditions. When the company has given any kind of loan, whether terms and conditions, whether they are prejudicial to the interest of the company, whether they are disadvantageous to the interest of the company, that is what the auditor will mention to the shareholders in the Caro report. Okay. Then we have re means what? Repayment schedule. Whether repayment schedule is regularly followed in terms of the principal and the interest. ORE, if the amount is overdue for more than 90 days, whether company has taken reasonable steps for recovery. Next is REF. During the year, if some persons have come to whom we had given the loan earlier, but they have come to us in this year for any kind of renewal, extension, fresh loan for existing loan. In that case, we have to mention 2 things in the Caro report: the amount of renewal, extension, fresh loan for existing loan, and the percentage of that to the total loan. Then we have REP, related parties and promoters. In this case, if the company has given any loan to related parties and promoters, you have to again mention 2 things: what is the amount of that, and the percentage to the total loan. Are you there? Okay. Let's go to the next, Caro clause 4. Linguse, again common, linguse under 185 and 186. 185 is loans given to directors, and 186 is inter-corporate loans and investments. Auditor will simply check if these sections apply, then whether these sections have been complied with or not. Okay, this is not there in inter, it is there in final only. For the timing, you have to just know. In final, more questions on this clause can come. Okay, because by that time you will be knowing those section numbers also. Let's go further. Accepting deposits. In that case, we are talking about rows. What is rows? Let's go for it. Whether RBI directions have been followed or not, whether rules framed have been followed or not, whether company has complied with section number 73 to 76 or. If RBI direction, rules framed, section 73 to 76, if anything is not followed, in that case, what can happen is the company may have received an order from any company law board, national company law tribunal, court, or any other tribunal or RBI. Then the auditor has to check whether those orders have been complied with or not. Complied with or? Simple. Okay. Next. We go to Caro clause 6, that is called cost records. Cost records, very simple. Whether company is maintaining cost records under section number 148, subsection number 1. Simplest clause, Caro clause 6. Caro clause 7, let's do statutory dues. Very nice clause. Statutory dues, 2 parts. First is undisputed, second is disputed. Undisputed statutory due means there is no dispute regarding the amount. No dispute regarding the amount. Company knows it has to pay, government knows it has to collect. But the company is still not paying, then in that case, the auditor is only required to mention the undisputed amount in the Caro report if 2 conditions are fulfilled. that amount should be outstanding on 31st of March. It should be outstanding. And it should be outstanding for more than 6 months. For more than 6 months. These two conditions have to be fulfilled. Only then the amount will come in the Caro report of the auditor. Second, the amount is disputed. Then the auditor will mention the amount of dispute and the forum where the dispute is pending. Where is the dispute exactly pending, in with which authority? In this case, we had taken the example of income tax authority. So we had done ITO or AO, CIT, that is Commissioner of Income Tax Appellate Tribunal, High Court, Supreme Court. Where the matter is pending of income tax, if income tax matter is pending, that the auditor can mention here. He has to mention the amount and the forum where the dispute is pending. Comfortable? This completes your 7 clauses of Caro. 8th one, unrecorded income now recorded. If some past income we are recording now, in that case, we have to ensure that whether it is properly dealt in the books of accounts. Of course, in the class, we did the suitcase exam. We have done that. Let's go further. Let's go to Caro clauses 9 to 21. Last part of Caro. Let's do it. Caro clause 9 is about repayment of loan. In that we see, we did a code called DP Jasu. Very simple. Default. Then it was purpose, and then it was Jasu. D was default. Default had whether lender-wise details. I mean, auditor has to provide lender-wise details, and whether company is a willful default or not, auditor has to mention. Purpose, whether loan is used for the right purpose, whether the company has taken short-term loan but used for long-term purpose. Jasu had 2 points: caring parent, careless parent. Caring parent is which parent? Tell me. From any entity or person, the company has taken a loan to pay the Jasu's obligations. So the parent is taking care of the child. What is careless parenting? The company has taken loan from any entity or person and pledged the securities of Jasu. In that case, if the company does any default of the loan, then the company's bacha, company's child, company's Jasu will become the Jasu of the entity or person. Jasu, of course, means joint ventures, associates, and subsidiaries. Okay, we have done this area. Caro clause 10, nice one. Tell me, 10. You're asking for money. So 10, turn your hand, asking for money. This is what IPO, FPO, debt security, convertible security, private placement, preferential allotment. Regarding this, whether the money has been used for the purpose or not. 2 specific sections have also been mentioned in the textbook regarding this, 42 and 62. I'll just tell you what that is. 42 is regarding further issue of shares. FPO gets covered in that. And 62 is further issue of shares. FPO gets covered in that. 42 is private placement. Whether these sections have been complied with or not. That when you do the reading of the textbook, you will find those sections there. Caro clause 11 is fraud. Fraud is A and C square. Amount of fraud, nature of fraud, CG reporting of fraud under 143.12, and complaints by the whistleblower. Okay. Nidhi company, go for it. You know it very well. Go for it. Tell me. Nidhi company. In this case, what will you check? You will check whether net owned funds to deposit in the ratio of 1:20, 10% is unencumbered term deposits, and whether there is any default of deposit or interest, deposit repayment or interest. Any one of these issues is there, the auditor will mention in the Caro report. Easy. Let's go ahead. Caro clause 13 is tere relatives, related party transactions. Very nice. This one. Tell me, related party transaction, if they are there, then the auditor has to see whether section number 177 and 188 have been complied with or not. Caro clause 14, that is internal audit. If the company has an internal auditor, the statutory auditor will mention in the Caro report whether the internal auditor is commensurate of the same level as the client, as the company. That is what the auditor, statutory auditor will mention. He will also mention, the statutory auditor will mention whether he has considered the report of the internal auditor, whether he has gone through the report of the internal auditor. Okay. Caro clause 15 is non-cash transaction. Non-cash transaction. Whether non-cash transaction, section 192 is complied with or not. Okay. Simple clause. Caro clause 16 is NBFC. NBFC, 4 areas: registration, certificate of registration, CIC, number of CIC. The registration is taken as per section 45IA of RBI Act 1934. Whether the company is, whether the NBFC is working without a valid certificate of registration or not. Whether it is a CIC, then we'll mention. And if it is a CIC and in that group, if there are other CICs also, we'll mention the total number of CICs. We'll mention the total number of. Next, Caro clause 17, you know very well, Satra Khatra loss. So cash loss if the company is doing in the previous year and in the current year, the auditor will mention that in the Caro report. Caro clause 18, resignation of statutory auditor. If a statutory auditor has resigned, in that case, there will be a casual vacancy that another auditor must have filled. That other auditor who has filled the casual vacancy must have completed the audit and must have given the Caro report. Now, when the other auditor who has filled the casual vacancy is giving the Caro report, he has to mention whether he has considered the issues and concerns raised by the outgoing auditor. The reason because of which the earlier auditor resigned, he has to check whether he has read those reasons or not, considered those reasons or yeah. Next, Caro clause 19. Before in Caro clause 19, when the auditor is making the Caro report, he'll go through 5 documents: financial ratios, financial assets, financial liabilities, financial statements, board auditors and management plans. After going through these 5 documents, the auditor will mention whether the company is capable of meeting its liabilities for a period of 1 year. Suppose this balance sheet date, then period of 1 year from the balance sheet date. From the balance sheet date. This is Caro clause 19. Caro clause 20, very nice. That is your CSR. Let's go into CSR a little bit. This is section 135 of the Companies Act. Let's start. If there is unspent CSR amount is there, in that case, we have to see that amount was allocated for an ongoing project or other than ongoing project. If it was for an other than ongoing project, then the company should transfer this amount to a fund under Schedule 7 within 6 months from the end of the financial year. If that unspent CSR amount is there and it was allocated earlier for an ongoing project, then the company has to transfer this to a special account called as unspent CSR account, and they have to transfer this within 30 days from the end of the financial year. This money can be used for the next 3 years. After that 3 years, still if balance is there, then you have to transfer it to a fund under Schedule 7 within 30 days. This is covered in section number 135, specifically subsection number 6. That is where it is covered. Yeah? Let's go further. You have CFS. CFS, explain to me, tell me. In a CFS, whenever there is a company and it has subsidiaries and associates, the individual holding company also and the individual company will have their auditors, and that auditor must have made the Caro report. When these individual auditors make the Caro report, they will cover all clauses from 1 to 20. But is it possible that they write something negative about the company? The answer is yes. The auditor of the consolidated financial statements will make the Caro report with only one clause, and that is Caro clause 21, where he will make a list of all the negative or adverse remarks given by the individual company's auditor. That is what is Caro clause 21. This is what we had done in the class. Are we there together, yes or no? That completes your chapter number 8, part 1 revision. Are you there? Which contains how many areas? Joint audit or branch audit, joint audit, Caro. Branch audit, how many areas? 2. Who can be the branch auditor? Using the work of another auditor. Joint audit, 4 plus 1. Advantages, disadvantages, a jointly and severally liable, special consideration, plus 1 is joint audit plan. Caro, 2 areas, applicability and 21 clauses. 21 clauses we have just completed. Okay, easy.